Today's real estate market.
Maybe your ticket to highly profitable properties, income properties.
Nice.
Moving forward with the Dekker team. Moving forward together with the Dekker team.
We are honored to have created for you free access to over 653 Life's Inside Track episodes where we share insider tips, making house home, and how to build wealth wisely through real estate. Great news is, all you have to do is subscribe to the YouTube channel or tune in to 99.1 FM on Fridays at 9:30 and stay in the know about really most things real estate and life. Crazy. And so we're going to explore today why the current real estate market favors multi-unit investments rather than just only, well, it doesn't actually favor single family. It actually favors multi-unit investments. And that's not always the case. Not every market favors them.
No, but right now, like, when I'm thinking like 10 years ago, when somebody come up and say, I want to get started in investing, I go, great, let's go buy a townhouse. It's going to be $399. It's going to rent for X. You're going to cash flow $100 a month with 20% down, and you're good. You're golden, right? Like values.
And it was true.
And it's true.
It was true.
It was true. And those 400, 10 years ago, the 400, now it's 600, 650. And that's the kind of thing that worked. And maybe it wasn't even 10 years ago, but the point is now, if you want to do a townhouse in Ottawa, it doesn't cash flow. You want to do a condo in Ottawa, it doesn't cash flow. So what do you have to do?
Because the rents haven't gone up proportionate to the increase in prices and the increase in interest rate combination.
Even though rents have gone up a lot,
yes,
they don't cash flow. So why go into a multi-unit? Well, there's a couple reasons. A multi-unit, I'm going to say, is 4 units and below.
Right. Right now, for the purpose of this segment, we're exploring 2 to 4. Yeah. 2, 3, or 4.
Because that's traditional lending. We don't get into commercial lending. We're going to do the next episode. I'm going to talk about commercial lendting.
The next segment, we're going to break that down. A lot of fun. Because, well, why do you say it's a lot of fun? Like, let's unpack that for a minute.
Because I love the intricacies and how, suddenly with the government incentives, a 5 or more unit may be more affordable to get into than a duplex.
Which is wild. Now, unless that duplex, which we shared in the previous segment, is a place you're going to live.
Yeah, if you're going to live in half, you can buy it for 5% down and live in half. And you got a great thing there because that rental is going to help pay your mortgage down. Capital gains wise, you should be okay. You check that with your accountant, but because you're living in it and it's only a duplex, I think you're going to get away with no capital gains. But
you're not an accountant.
That's why I said check with your accountant.
Check with the experts on your team that specialize in that given thing.
Exactly.
Right? Okay. So the exciting things around multifamily 2 to 4 units. Beyond just the one that you're going to live in.
Okay.
One of the 2.
So the beauty is if you're not living in it, it doesn't have to be right here in Ottawa. It can be in a surrounding town where the financial numbers work.
And when we say financial numbers working, what we're looking for is with a modest down payment, which with an investment property that's 2 to 4 units, if you're not living in it, you're going to need 20% down generally. Could be a little bit more, but most of them you're going to be able to do with 20% down. Yep. The great news is if you did the thing we suggested in segment A, which was to buy your principal residence, either a duplex or a single family, and let some equity grow, now you have the money for your down payment out of that home. Yeah. If this is sounding confusing, of course you want to do a clarity call. You want to start at the beginning and unpack your own personal situation, not general just.
So why do I say multi-units are really good right now? One is the inventory is up 18%. So there's more choice, there's more properties. And the people that want to sell their multi-unit, they're retiring, they're tired of it.
They're coming to the end. They've had a great run. Most of them have had a great run.
Yep. Or it could be that they bought it a couple of years ago. They took a variable rate mortgage, and now it's negative cash flow, and they just need out of it. So there are some times where you're going to get a good deal on a property that's a multi-unit. The other thing is when you have multi-units is if you got 4 units and one of them goes vacant for a month while you find another tenant for it, you still got 3 rental incomes coming in. It's not like a single family home where if the tenant's out, you're paying the entire mortgage for that month or 2, right? So it has that diversity effect by having more tenants.
Right.
Okay. The other thing that I love about multi-units is the valuation is not done the same way as a single family home. Single family home, it's based on what another property of similar
that's
qualities.
relevantly the same or has a relevancy to the one that's being sold, right? If it's we don't use the language comparative so much because there's always differences, but there's relevant data, especially with a single family home. If it's a townhouse with 3 bedrooms, no ensuite bathroom, single car garage, built about 30 years ago, they're going to be within a range.
Yeah, and you can go and find one similar, right? And it's somewhat the same as far as cap rate goes. And I won't get into explaining how to calculate cap rate, but just know that that's how we evaluate multi-units, and it's based on their income. And now the beauty is, because the cap rate is a multiplication factor, if you can increase the income, if you can renovate, if an apartment goes vacant and you can renovate it and move the rent up to market rent, like there's a lot of properties where the rent's way too low right now, but they have potential. And when those rents go back up to market rent, the value of the property is going to skyrocket. And
we've seen that ourselves with a property we own, right?
Yeah. And you can't get that in a single family home. That's why multi-units are very, very interesting for investors, right? So you can do the right things over time, which will significantly increase the value of the property.
Right. And I just want to highlight this little kind of tidbit that sometimes people get scared about, and that is rent controls. And there are rent controls in Ontario, unless your home, the one that you're turning into an investment property or is an investment property, was built prior or after, November 15th, 2018. No rent control applies. Right. And that's a good thing for tenants to know too, because they, I think, have been lulled into a false sense of, if I'm in a rental next year, my rent can't go through the roof. But if the market will bear it, if it was built after November 15th, 2018, it could.
Yeah, precisely. And, rent control is not a horrible thing. The problem why so many rents are too low is because landlords don't raise the rent what they're allowed, which sometimes is only 1%, 2%, 3%, somewhere in there. But it accumulates and it multiplies. So if you've done it for 20 years, the rent's decent. If you haven't done it for 20 years, suddenly your rent's like half what it should be.
Right.
So Lois Hickman said, the best investment on earth is earth. And we're happy to be clarifying your options, because when your options are clear, your wisdom will flow.
Moving forward with the Dekker team. Moving forward together with the Dekker team.